All right.
Good morning, everybody. Happy Monday, all you wonderful melon heads out there. I hope you guys had an awesome weekend. It is Monday, July 31st. End of the month is here. A new week is upon us, and all the wonderful possibilities that brings with it. And let's talk about what happened over the weekend, because it was a pretty eventful weekend, guys. First of all, we had another bank failed. Heartland Tri-State Bank, an little itty-bitty bank, only $130 million in liabilities. But that one went down. Late Friday news dump. I did a video about that one. We won't rehash the whole story, but you can go back and check out that video that I did over the weekend if you want to see that one. Very small bank, nowhere near the size of First Republic or Silicon Valley, but small rural bank going under. I don't know, is this an isolated case like they're saying it was? Was there some kind of wrongdoing going on there? Or is this just the first of many smaller dominoes that are going to start falling? We'll know within a few days. But that happened this weekend. And then Yellow Trucking, the less than load freight carrier, we talked about them a little bit last week, and we talked about them a lot on my Patreon Zoom call on Wednesday about how they were burning through cash at such a high rate that it basically said at the rate of cash burn that they were going to be bankrupt by Monday. And I was way off because they were bankrupt by Sunday afternoon. They didn't file for bankruptcy. That hasn't officially happened yet, but the company has ceased all operations. They laid off their employees. There is no activity at any Yellow Trucking terminals today. They're out of business. The company had over $1 billion in debt. They had over 30,000 employees. Everybody is now out of work. So my heart goes out to all you folks who worked at Yellow who just lost your jobs. I've been through a plant closure before. My wife and I both lost our jobs on the same day. I know what that does to towns and to peoples. It is a very big deal. I'm sorry you guys are going through that. We saw this coming, guys. This company, the big expansion in the logistics in 2020 and 2021, they took out a $700 million loan from the government. They tried to ramp up production because of all the bottlenecks and the shortages, and remember all the parking lot outside of U.S. ports? Well, that has disappeared and vanished, and now we're left with empty terminals, and this company just couldn't survive it. We've been seeing fuel prices go down. We've been seeing freight prices go down. So I don't know, was Yellow a case of just really bad management, or is Yellow the first of many that are going to start going down? Something we got to keep an eye on. But also going on last night, and another really big story, potentially massive story, is what happened at the Bank of Japan last night. The Bank of Japan announced an unscheduled bond buying operation. Okay, great. What does that mean? Boring, right? Well, that means the Japanese government last night, unplanned in the middle of the night for us, they had to print yen and buy bonds to suppress interest rates because interest rates were rising too fast for them. We talked about last week how the central banks, namely the BOJ, how they had made a mess with their yield curve control policy, and they announced a little tweak to their yield curve control policy where they didn't raise their cap. They have this cap at 0.5% on their 10-year JGB, or Japanese government bond. They said, we're going to let that rise a little bit. We're not going to let it, we're not going to raise the level. We're just not going to enforce it as much, they said. They said it's going to be an orderly transition. And of course, interest rates on the Japanese 10-year government bond had been going straight up ever since. Well, in the middle of the night, they started printing yen and buying those bonds to bid up the prices and to send the interest rates lower, or at least to stop them from rising. Now, this is making a mess here, guys. We got the exchange rate between the yen and the dollar has been all over the place the last few days, and it's threatening something called the yen carry trade. We'll talk a little bit about that in a little bit. But what happens in Japan, don't for 1 second think it doesn't affect you. Don't for 1 second think it doesn't affect your pension, your 401k, stocks you might be holding, your own investments. It absolutely does. Japan is the anchor of the global debt market. And right now, they're messing with the anchor. And of course, if you mess with the anchor, it's going to affect the rest of the ship. So with that, we're going to shrink my big melon of a head. And as we do that, I have to ask you guys, please don't forget to smash that little like button that's just below the screen here. It really helps me out with the algorithm, and I appreciate it. And if you're new here, won't you please like and subscribe to the channel? We do this every morning. Fear Greed Index over at CNN at a much more modest extreme greed of 77 after spending almost the entirety of last week in the low 80s. We've still been extreme greed territory for over a month. We've been above 70 for almost 2 months. This market is propped up as high as possible on the top rung of the ladder, reaching up with trying to grab something really up high. Nothing bad ever happens in those circumstances, right? Moving on. S&P 500 this morning is up another 5 points, or 0.12%, at 4,587. The Dow is up 14 points, 0.04%, 35,473 on the Dow. So those indexes are pretty much flat. The NASDAQ's faring a little bit better, up 24 points, 0.17% higher on the NASDAQ at 14,344 this morning. Looking over at commodities, check out gold. Over $2,000 for the yellow shiny, trading at $2,006. That's up $6 this morning, or 0.33%. Gotta love to see that two-handle on gold. And silver's having a pretty good morning also at $24.78, up 29 cents, or 1.17%. Good to see the shinies doing. Congratulations to all of you stackers out there. We got platinum and palladium are both up this morning also. Platinum's up 1.75% at $960. Palladium's up 2.7% at 1,273. Interestingly enough, my moderator Mish pointed this out this morning on our phone call before we go live, that South Africa just posted a very small, very modest trade deficit for the last quarter. And I'm wondering if that might be affecting the PGM Metals Group, because a lot of platinum and palladium comes out of mines in South Africa. There have been a lot of power outages in South Africa. The grid has been very unreliable there. I'm wondering, this trade deficit that South Africa just posted, could we see the beginnings of a disruption of supplies to platinum and palladium brewing over there? I'm not sure that's what caused the trade deficit. Could have been oil, could have been food prices, could have been anything. But when you see something unusual happening in South Africa, my first instinct is to go look at platinum and palladium. Both of them are up this morning. We've also got West Texas Intermediate crude is up about $1.95, 81.53. Oil's bull run continues. And we've been tracking wheat prices lately because of troubles in the Black Sea. Wheat is way down this morning, 3.4% lower at $6.80. Let's talk about the U.S. dollar. The Dixie's up again this morning, another 17 basis points to 101.8. That's after a good week that the Dixie had last week. And let's take a look at U.S. government bonds. Also, we got the 30-year is pretty much unchanged at 4.02%. For the 30-year, the 10-year's at 3.967, unchanged, still below that important 4% level. The 2-year, 4.89%, and the 1 month is at 5.37. So really nothing's moving in the bond market right now. It's pretty much flat, not sure which direction it wants to go. But this was the big story last night when we're talking about bond markets. This is in Forex Live. The Bank of Japan announces unscheduled JGB, that's Japanese government bond, buying operation. The BOJ offers to buy an unlimited amount of JGBs at a fixed rate with maturities of 5 to 10 years, and they offered to buy 300 billion yen of Japanese government bonds with a residual maturity of 5 to 10 years. This gives USD to JPY a little lift. All right, what does all that mean? It just means the Japanese government bond has said, here's what the interest rate's going to be, and we're going to buy an infinite number of bonds until we achieve that level. And that's what happened last night. Now, you can see this in the chart here. This is the chart of the Japanese 10-year government bond. This is going back to the beginning of last week here. You can see we were humming along down about 0.44, 0.45% all last week. And then I believe it was Thursday afternoon. Maybe it was Wednesday afternoon. I'm getting my dates mixed up a little bit here. But right at 1 p.m. is when they first leaked the story that the Bank of Japan was considering tweaking their yield curve control policy. And we had a step change up in Japanese government bonds when that happened. They rose about 5 basis points to about 0.5%. A few hours later, they rose again to about 0.55%. And then over the weekend, they rose again to about just under 0.6%. Now, after rising to 0.6%, that's 15 basis points and just a couple of days of increases in the Japanese government 10-year yield, that's when the BOJ said, okay, that's enough. The rates are rising too fast. We're going to start printing yen and holding those prices down. All right, so we've had a pretty spectacular rise. Maybe spectacular isn't the right word, but this is a pretty substantial rise in the Japanese government bonds interest rates. And understand, this is like the base interest rate of the world. Japan sets the floor for interest rates everywhere else. And we'll get into that in a little bit more, what that means. Here is the number of Japanese yen it takes to make $1 US. Again, this is going back to mid last week. When was the 27th? The 27th was last Thursday was when the announcement came out. All right, so here's when the announcement came out, 1 p.m. last Thursday. All right, and the number of yen to make a dollar shrank. So the Japanese yen strengthened on that news initially. But you can see ever since then, the yen has been getting weaker, more yen now to make $1. And now the yen is actually weaker than before that announcement was made. So this is messing with the exchange rate. The Japanese yen is a big input to the US dollar index, or the DXY. So this is putting upward pressure on the DXY right now. Now, Michael Gayed on Twitter, who's a pretty good Twitter feed, you guys should be following this. And I've talked to Michael before in the past. He's a nice guy, real smart guy. He's forgotten more about the bond market than I could ever know. And he put this out, and this was over the weekend, and this is a pretty ominous tweet for Michael. And he's saying, if the yen carry trade unwinds, tech unwinds, and the entire stock market breaks down with no one prepared, FinTwit could be on the verge of a very expensive lesson. Markets humble us all, just not all at once. So FinTwit could be in for a very expensive lesson. Markets humble us all. He's talking about the overwhelmingly bullish sentiment in FinTwit right now. FinTwit is financial Twitter, or FinX, I don't know, Finxit, whatever you call it now. But he's talking about the overwhelmingly bullish sentiment in financial circles right now. You see it pretty much everywhere but this channel. Everybody's bullish, right? Now, what he's talking about here is the yen carry trade. If that unwinds, tech unwinds, the entire stock market breaks with no one prepared. The yen carry trade is interesting, guys, because up until a few days ago, you could go to Japan and borrow money from a Japanese bank for peanuts, right? I mean, the Japanese government bond was 0.4%. So you could go to a Japanese bank and you could borrow money for, I don't know, 1% interest. So if you go borrow yen, 1% interest, then you flip those yen for US dollars, and then you come back to the United States and you buy US government bonds that are yielding 5% for a 1-month treasury, 5.4% for a 1-month treasury. You're making a big arbitrage, aren't you? You borrow yen, you flip to dollars, and then you borrow dollars, or then you lend to the U.S. government for 5% interest. That's known as the yen carry trade. But you don't actually just have to buy U.S. government debt. You could buy anything with that once you buy the yen or borrow the yen and then flip them for dollars. You could borrow yen and use it to buy, I don't know, NVIDIA stock or QQQ, or you could just borrow yen and YOLO into 0 days to expiration call options on the SPY. And a lot of people speculate that the yen carry trade has been the source of this seemingly endless supply of money that has been pumping into stock markets lately, inflating asset prices. Well, if it's getting more expensive to borrow yen, that could be a problem. That could be a big problem for the yen carry trade, which means this source of seemingly infinite funds might be about to dry up. Or at the very least, the status quo is being disrupted. And again, the guy is at the top of the ladder, at the very top rung, reaching for something over his head. If somebody comes along and kicks the ladder, he's going down. So this was a very ominous trade from Michael Gayed. And keep an eye on this story, guys. Then keep an eye on the yen carry trade. This might be something like, do you remember back in November when the UK gilt market went crazy and there was almost a collapse of the UK pension system? And nobody knew what interest rate swaps were back then and how that could cause a problem. But once people's pensions were at risk, you bet everybody started studying up on what a rate swap was and how dangerous they could be. I wonder, is the yen carry trade the next story that everybody is going to be Monday morning quarterbacking on? So shout out to Michael Gayed for that one. Follow him on Twitter, guys. And let's talk about this other story too, because more stuff coming out of Asia. UBS. Remember, UBS is the bank that bought Credit Suisse when they failed back, I think it was in March that Credit Suisse failed. UBS bought them up for cheap. Well, UBS to dispose of the riskiest Credit Suisse loans to Asian clients. The bank is to place most structured APAC or Asian Pacific loans into a wind down unit. UBS is seeking to reduce risks from Credit Suisse legacy business. UBS Group AG is planning to exit billions of dollars in loans to Credit Suisse's clients in the Asia-Pacific region as the Swiss bank works to neutralize risks to its profitability and reputation from the defunct lender. Those are some strong words. They're worried about their profitability and their reputation. Banks don't usually float around words like that. The bank intends to either wind down or sell off the majority of Credit Suisse's more complex and high-risk structured loans. people familiar with the matter said, there's the anonymous sources again, those riskier assets will be placed in the so-called non-core unit for businesses that UBS doesn't want, the people said. All right, so what are they talking about here? Credit Suisse was very aggressive. They were notoriously awful in the risk management department. And that's why that bank failed. It was huge. Credit Suisse was a GSIB, a globally systemic important bank. All right, so when Credit Suisse went under, that was a huge deal. The Swiss government engineered the takeover with UBS. That could have been a Lehman moment. We dodged a bullet there. Well, right now, UBS has gone through the books, and they've realized, oh, my God, look at all the crap. Look at all the garbage debt that Credit Suisse is holding as assets. They lent money to people that could never pay back. I suspect this story has a lot to do with Chinese developers and the Chinese property market. All right, now, there are no dollar amounts listed in this article. They're not talking about specifically what country. They're just saying APAC. And they're just saying the riskiest loans. And when I think of APAC and risky loans, I immediately think of Chinese ghost cities built with borrowed money that nobody lives in. So UBS is going through the books. They're taking all of these garbage loans. They won't say how many. And they're saying, okay, we're going to put all this stuff into our non-core unit where they're probably going to carve it off, either spin it off into its own doomed company or try to sell it to somebody else at pennies on the dollar. But UBS has looked in the books and they realize there's a lot of crap in there from Credit Suisse and they're trying to get rid of it. That is the takeaway from this story. Things happening in Asia, guys. Things happening. All right, and speaking of things happening, here's the sad one that happened over the weekend. I wouldn't have minded being wrong about this one, guys, but there it is. Trucking giant Yellow shuts down operations. The 99-year-old company with 22,000 Teamsters employees advises customers and workers of the shutdown. And guys, that 22,000 number, that's just the Teamsters employees. There's another 8,000 people, non-union guys who worked at this company. So 30,000 people just lost their jobs. Think about the significance of that. That is a huge deal. That's a lot of lives thrown into chaos when that happens. That's a lot of families that are in turmoil now. Yellow, one of the oldest and biggest U.S. trucking businesses, shut down on Sunday, wrecked by a string of mergers that left it saddled with debt and stalled by a standoff with the Teamsters Union. The 99-year-old company is known for its cut-rate prices and has more than 12,000 trucks moving freight across the country for Walmart, Home Depot, and many other small businesses. What Yellow couldn't deliver, despite swallowing rivals, getting union concessions, and securing a government bailout, was consistent service for customers or profits for investors. The Nashville, Tennessee company sent out notices to customers and employees saying it was ceasing all operations at midday Sunday. The Teamsters said the company notified the union it intends to file for bankruptcy. A failure imperils nearly 30,000 jobs. It's not imperils. They're done. Those jobs are gone now, including 22,000 Teamsters. Hundreds of its non-union employees were laid off on Friday after the company stopped taking in new shipments from new customers. So sorry to hear this story, guys, but we saw this one coming. It's just sad to see. We'll leave it at that. Now, all is not lost. I don't want to end on such a low note, so let me just throw this one out there. I also saw this one this morning, all right? And I'm not acting like, hey, this is just such an easy transition for anybody to make. Again, I've been through a plant closure before. I know what that means for people and for their lives and for their families. But a little bit of optimism to end the show. The iconic American hard hat job that has the highest level of open positions ever recorded. The construction industry in America is facing an extreme labor shortage. Roughly 650,000 workers, slowing completion of construction projects from residential homes to infrastructure and hospitals. There are 650,000 openings in the construction industry, or at least a shortage of workers. You know what that means for construction workers? When there is a shortage, there's not enough supply, and there's more demand, that means the price of construction work is about to go higher. So if you find yourself in one of the unfortunate position of being one of those yellow guys, or you're just down on hard times, look into construction, guys. 650,000 open positions, and this is an in-demand workforce. All the spending on factories and the spending on construction, it's still going on from the CHIPS Act and the Inflation Reduction Act. So there's a silver lining to this gray cloud, guys. The wages paid to construction workers is going to have to rise in order to attract more people into those positions. So I just wanted to end on a little bit more of an optimistic note there. And I got a couple of thank yous I got to send to Mr. Charles Coughlin. Thank you, Charles, for the super chat and the support of the channel, sir. He says a book called The Ponzi Factor argues that unless a share pays dividends, the company is a Ponzi. I don't like that, but I can't refute it either. I'd stop short of saying it's an outright Ponzi if they don't pay dividends. I prefer dividend payers because I buy companies for a share of their profits, and if they're not paying dividends, they're not giving me a share of profits. But right now, the market is being driven mostly by growth companies that don't pay dividends, and some of them don't pay profits or don't even have profits. But those are growth companies. So, this is kind of getting a little like peak Kevin O'Leary here. Kevin O'Leary, the FTX guy, he doesn't like anything that doesn't pay a dividend. I prefer dividend payers to growth companies because growth companies tend to be maybe not outright Ponzi schemes, but they tend to attract bubble-like behavior and FOMO behavior. When people overpay for growth and then that growth doesn't materialize, you get catastrophic collapses in share prices. So I prefer dividend stocks myself, but I'd stop a little bit short of saying they're an outright Ponzi if they don't do that. But there is a risk if a company doesn't pay dividends. That means there is no floor under their share price. A dividend acts as a floor, limiting the fall of a company's shares, because as company share price falls, the dividend rises, and so that tends to attract new buyers. So thank you very much, Charles Coughlin, sir, for the super chat and the support of the channel. And thank you, Steve Woitis, for your super chat, sir. He says it's not the recent rate increases that are concerning. It's the past increases that have not affected the economy yet. Yes, Stephen, yes. The lag he's referring to, the lag indicator, right? It's, the banks that failed, Silicon Valley, Credit Suisse, Signature Bank, First Republic Bank, all these banks that went down, PacWest, Silvergate, Heartland, Tri-State. It wasn't the rate hike in January or it wasn't the rate hike in March that killed those banks. It was the rate hikes last summer that killed those banks. It takes time. I had somebody pointed out in a comment that just because the Fed raises rates doesn't mean everybody's interest rate right away goes up. That's true, right? Your mortgage hasn't gone up because the Fed raised interest rates. But if you sell your house and take out another mortgage, then your rate goes up. So it takes time for those higher rates to work into the market. If you bought a car in 2020, you still have a low interest payment. But if you buy a car now, you're going to have a higher payment. And so it takes time for those higher rates to work in. People get divorced, people move for their jobs, Army guys get redeployed to different parts of the country. And so eventually those higher rates translate into higher costs for housing. It just doesn't happen right away. There's a lag, and that's why the Fed is slowing down now. And that's why Jerome Powell says he's worried about the full effects of the prior tightening haven't been felt yet, because it takes time for those higher rates to translate into direct effect on your wallet. So you're absolutely right. It's not the increase that we just had. It's not that 25 basis point hike that we got a few days ago. It's the 75 bip hikes from last summer that are causing the pain right now. Good insight, Steve Woitis. Thank you, sir, very much for the super chat, the support of the channel. Real Estate Mindset, my buddy Travis is here. Happy Monday to you too, brother. Thank you for all you do. Thank you, Travis. I appreciate that, and I appreciate Real Estate Mindset. Let's bring up Travis's channel because I just paid a visit to Real Estate Mindset over the weekend. Let's see if she should come right up. There we go. Hey, look, there's the video we did over at Travis's channel. Here, let's bring up Real Estate Mindset here. There is the Real Estate Mindset. I just did an interview over at his channel over the weekend. It was a great time talking to him. And we recorded one for our channel, which you'll be seeing later today. Right here, I'll be posting an interview about the housing market. And what is going on in the housing market? Why are home prices not going down? Why are they stubbornly high? Are they going to go down? Are they going to keep going up? Travis had some really good stuff. That'll be out in a couple hours, so keep an eye out for that one. And thank you very much, Travis. I appreciate the super chat, the support of the channel, brother. And good luck with your own. All right, guys, I think that is about all we got for today. So I want to say thank you, everybody, very much for your time, spending it with us. Thank you to my Patreon supporters for everything you guys do for the channel. Thank you for all of the super chats. And links down below to all that good stuff should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big.